Hello, everyone. It's Dan Campbell with Texas Open Door Realty. Is it possible to find a way to invest without investing in the stock market? I get asked that question on a regular basis, and I tell my clients, absolutely. Consider the power of real estate investing. Let's talk about what I want to call leverage. Leverage in investing in real estate. We're going to look at two investing scenarios. Let's say you decide you want to purchase a home and it costs $300,000. The cost to get in that home would be approximately $22,000 after you make a 5% down payment, $7,000 for closing costs. Your total investment would be around $22,000 to get into that home. Well, since World War II, according to Texas A&M University Real Estate Center, we've had an annual appreciation rate between 4 and 6% year over year. Now that includes some down cycles that we've had. By the way, we haven't had a down cycle since World War II that lasted longer than 3 years in Texas. But let's just be conservative and say that the appreciation rate for this $300,000 house is 4%, which, by the way, in the last 10 years, it's been much higher than that. But we'll use 4% for this investment scenario. After the first year, at 4% appreciation on the $300,000 house, that house would be worth $312,000. After the second year, $324,000, third year, $337,000. Finally, after the fifth year, that house would be worth $364,996. Sounds pretty good, right? Let's take the Standard & Poor's 500 as the second investment scenario. Let's say you take that same $22,000 that you invested in that $300,000 house, but instead of putting it in the house, you put it into the stock market and you bought shares of an index fund in the S&P 500. I talked to my investment professional for some of my retirement funds, and he said prior to COVID, the annual appreciation rate for the S&P 500 had been running about 12% for the last 5 years. That's very, very good, right? Way better than average. That's pretty amazing, 12%. But let's say you take that $22,000, invest it, and after 5 years of a 12% appreciation rate, notice that's gone from $22,000 down up to $38,771. So the gain on this initial investment of $22,000, if you invested it in the S&P 500 at 12% interest, would be a 77% gain. That's pretty great, right? 5 years, your investment went up 77%. But let's look at the real estate investment. The 5-year-old investment on that $300,000 house in this same scenario with the very conservative appreciation rate of 4%, your gain would be 295% on that initial investment of $22,000. That's significant. If you take my own house that I bought in 1999, 21 years ago, I invested $38,000 in that house. It cost $190,000. Today, that home would sell for $210,000, which is an increase of 552% on that initial investment of $38,000. Now that is significant leverage. If you want to know more about investing in real estate, I'd be happy to go over with you the opportunities and also some of the risks involved in that. Of course, these are just estimates based on past years' gains and don't guarantee any certain rate of return for the future. But if you want to talk more, give me a call. Talk about this more, give me a call. I'd be happy to go over it with you. This is Dan Campbell with Texas Open Door Realty.